So I just explained, all our operations in Turkey, how we met with the Pundi X, and how we connect the Pundi X, and how we connect the two company, and our physical exchange operation in Turkey. So first is that I want to start with you. So can you please introduce you to our community and and Pundi X? How you established the company? What was your ways, and how many countries are you operating in, and what is the technology of Pundi X?
So thank you, Hakan, and thank you for everyone that is here today. I think it's a pleasure and a nice time to actually discuss about fintech, crypto in this very, very exciting market. And for the journey of Pundi X, we actually started in 2017. And when we started Pundi X, the question that we had was, why do we need crypto? And back then we realized people were getting into crypto for profit, for speculation, which is not wrong. But we also realized that crypto is actually an enabler for the people that are unbanked. Because if you look at the world globally, there are many people that doesn't have a good access to the banking services, and crypto can actually be the enabler.
And so, we're growing as the world grows. The economies of different markets change, and we kind of try to meet that change and try to inspire innovation, particularly in the financial area. And so those places where banking needs to be maybe complemented by innovative approaches is where we have our targets. So we got involved with OVO how many years ago now?
So it's like 3 years.
3 years ago. And so Hakan brought to us a Turkey-specific approach. So as Hakan will explain his business, that he had an idea of setting up kiosks and exchanges, and it was something that we hadn't thought about because we hadn't had a market where that was going to really be appropriate, where it would really take off. And so I think that's as global as blockchain and the way cryptocurrency works is one of those things that seems borderless. But in fact, in terms of being able to reach people and getting people involved with it, it has to be very market specific. And so we do our best to empower local people to develop whatever products we have to meet the local needs.
Yeah, thank you, David. Actually, it was a need. It was not my idea. The physical exchanges. If you go to in Turkey, we have visited so many places in Grand Bazaar, and in the shopping malls in Taksim or in Antalya, Alanya, there are several hundreds of physical exchanges. But on a brand, using the technology and complying with the obligations, Pundi X may be the first solution of the physical exchange side. So, and when we compare the other countries like in Dubai, in Hong Kong, in Europe, so I saw physical exchanges in Europe too. So in Turkey, it's very important, I think, because there are like 13 million foreigners are living in Turkey, and these are students, these are businessmen, and they are transferring money to other countries, and the cryptocurrency is the easiest way to transfer to 8.2 people. But actually, my main point, when I was becoming a master distributor of Pundi X, is not opening a physical exchanges. Actually, I was planning to get these devices and deploy to the banking system as a payment method. So Emre is here with us right now. Maybe we can talk with you, Emre. You are an employee of the innovation team of Akyüz. And actually, I have very close relation with the others banks innovation teams. And I know that all of us is waiting for the regulations to move forward on both crypto payments and exchange side. So, firstly, please introduce yourself, and after that, how do banks approach on cryptocurrency and Web3 banking? How Akbank's approach on that?
Yeah, actually, thank you everyone for being here. I'm Emre from innovation team of Akbank. And actually, Akbank is a department that is founded, I believe, 7 years ago with the, let's say, aim of being the first contact point for fintechs, startups, and technology companies that wants to work with Akbank actually. So they are in a pace environment, they want to act quickly, but as a bank, it can be hard sometimes to be in the same pace with them. So actually, banking is a department that has some shortcuts to be able to move forward with fintechs and startups. And our main aim is to create actually proof of concept projects with fintechs and startups and then go to full implementation. But we want to try and fail. If we fail and if we succeed, we want to go to full implementation. It's one of the main responsibilities of our team. And then actually we have entrepreneurship program, maybe you have heard it, Akbank Plus program. Actually, it's a kind of new program for us that we started last year, and we are actually creating our own entrepreneurs from our own bank with our own employees, and we make investment to their companies. And then we try to be a, let's say, active part of the ecosystem like today, and also we want to support all of the fintechs that want to be a player in the ecosystem, because we believe that it can be only developed by working together with fintechs and startups like that. And we don't see actually them as competition, but we see them as partners for our bank. So the main aim is for the innovation team is that actually. And about the, let's say, what can do banks actually, we see it in the same structure that we see in fintechs. Actually, I believe 76 years ago, bank thought that we should work with fintechs and we should find a way to do that. And actually, until now, we have completed 40 projects and fully implemented 20 of them. So I believe we are doing some good job in that sense, but of course, some of them is about Web3 technologies. Actually, you can think money transfer with Ripple. Actually, we are the first bank in Turkey that completed that project. We have been part of V-Trade ecosystem, a trade finance ecosystem. Unfortunately, it was a try and fail project, but we learned so much about it, and we actually learned so much about the blockchain system with the regulator there, because we have used cloud there, we got special rules from regulator, and I can say that they are very open to that. So I think we are a bit lucky, even if we don't have regulation yet. And just going back to the point that we believe fintechs are partners for us, so again, Web3 fintechs, Web3 technologies are partners for us also, so we are trying to find the right way to work with them. But we should think actually as the main thing about our system, we believe win-win scenario, so I believe we should create value for our customers while we are creating value for our partners and also for our bank. So we shouldn't just try and fail. We should just aim to create value for all ecosystem if we want to create some real life use cases, because I believe it's the main challenge that we face today, because it's hard to create real life scenarios in which technologies. I think we will talk about that, but there are lots of challenges why we can't create them.
Thank you. Actually, yeah. I can understand, banks are very big structures, and in Turkey, almost every bank has a, e-money companies too, different companies to move faster, to adapt the technology to the ecosystem more faster, because, banks are regulated structures, and it's very difficult to expand the system on the fintech area. So, Zach, I want to turn to you, and I think you have a presentation for how Pundi system connects with the bank on the Web3 area, in Web3 banking, and what's our future plans for that. I just want to give you the speech, and can you please present to your presentation?
Sure, Hakan. So I think rather than a presentation, maybe we can just also discuss a little bit. Okay. So I think our friends on Outbound actually mentioned something very important. How to work with bank and how to coexist with bank. Today morning when I was having breakfast with David, I think David mentioned something. In the infancy of blockchain, and in that instance, Ethereum, many developers want it to be very purist, right? It's either you are blockchain or you are not blockchain. So it's like either you are my friend or you are not my friend. But I think the truth is a lot of things are actually somewhat in the middle, right? For blockchain to flourish, I think bank will play a major part in it. It will change how bank works. It will change how maybe accounting firm works. It will change how trust between contract work. But I think what it shows is that all the existing players, like KPMG, like government, law firms, they will play a role. And the faster those organizations adopts, I think that will give them a competitive advantage amongst their peers. So I think the bank that adopts blockchain testing, blockchain transaction, or even speak to blockchain people, I think they will be more competitive with other banks. So I think it is also for Web3 companies like us to learn to work with bank. Yeah. So of course, I think banking today it's been this form for many tens of years. So right now we see many things that the blockchain can actually change. For example, payment services. How do you do inter-country or even intra-country transaction? What are the costs involved? And I think very importantly for crypto people, the trustlessness. I think if blockchain is set up correctly, the trustlessness will be a very important part whereby the people can actually have ownership of the money, but with the help of the bank. So a smart contract, people keep saying that, oh, okay, if you have a smart contract, that means you don't need a bank. I mean, the very purest developer. But I think a smart contract is actually a contract that is governed collectively, right? So it's governed by, say, 4 of us, and maybe I'm the owner of the money. So my contract, my key actually holds, say, 50% or 40% of the authority. But I also need other authorities just in case I lose my private key or something happens. So I think the trustlessness of smart contract or Web3 needs participation from the bank itself. So I think that is also something very important. So I think Web3 banking 101 really refers to the next generation of online transaction. And I think beyond technology, I think it's really how the mindset will change. How the mindset of transacting things first through bank accounts, right? I log into my bank, I see what is my balance, to maybe log in through a smart contract and the transaction is actually logged on to the ledger. And I think that also has a very big role for the banks to play, because the truth is a lot of people lose their private key, right? The truth is more people lose their private key than they lose their funds with the bank. That is statistically correct. So I think when we adopt trustlessness, we bring the trustlessness to the ledger, which means that I really own the keys. But I think there are parts that a smart contract will play whereby if I lose the key, maybe David, as my good friend, can actually recover the money through contacting Hakan, another friend, and also a authoritative party, maybe it's Akyüz. So I think that is a kind of evolution where everyone can play a role. Yeah. And of course, security is very key thing too. So Web3 banking mechanism, I believe we have many experts here. So blockchain technology is definitely one, and right now blockchain technology has really flourished. There's so many technology. There's Bitcoin, but there's also Ethereum. So Ethereum is doing what Bitcoin cannot. Bitcoin is to a large extent, non-smart contractable crypto. So you cannot program it, but it is a very safe storage. Ethereum actually brings smart contract, and Ethereum right now, according to many metrics, is actually the world's biggest crypto. But we also have very interesting growing blockchain use cases like FunctionX, which actually serves for options and perpetual markets, because options, derivative, perpetual market will also benefit from the blockchain growth. So there's so many growth of different blockchain in this space. Of course, smart contract will play a big role. Cryptocurrency will play a big role. And I think interoperability will also be very, very critical. Yeah. So I think one thing that is very key for Web3 banking is actually self-custodial wallet, which means that I actually hold my own accounts. And there are a flourish of self-custodized wallet. And I think one of the key offering that Pundi X, a physical store, has is actually for people to be able to actually acquire crypto and hold the crypto using their self-custodized wallet. So they really own their own keys. So I think this is a major key part of Web3 banking, and also giving a lot of financial inclusion. So I think Pundi X actually started by wanting to help the unbanked. And we realized that there is really a lot of markets and a lot of things that we learned from Turkey that we are applying globally to allow other consumer that is not accessing banking solution as much to actually get onto the banking rails. And I think even with that, innovative banks, for example, like Akyüz, will be able to help, because they're actually onboarding to a new kind of solution, also with the help of the banks. This is actually our signature offering. Using Xpost, we can actually allow people to exchange for crypto, whether it is to send the crypto from a user to a Pundi X store, or to acquire crypto from the Pundi X store. And Xpost, in a way, is a reflection of openness, trustless. When I say trustless, which means that you don't need to trust anyone to own your things. You have the trust to those things yourself, and also it's very distributed. So we have many shops globally, and Turkey is a very key market. And as David alluded, we actually learned a lot from how to operate Pundi X store in Turkey. In some ways, we adopted the franchise model. We knew the franchise model was the right way to go, and working with you, Hakan, in the Turkish market allowed us to actually figure out how to exercise the franchise model successfully. What are the things that the merchants want? And the Xpost actually allow crypto sales. So we actually see ourselves as a solution provider, technology solution provider. And using that technology that we provide, we actually allow different kind of change, different kind of cryptocurrency, whether it's Bitcoin, whether it's Ethereum, on different kind of chain to actually operate. So we are chain agnostic, we are token agnostic, we allow different kinds of tokens to be bought, to be acquired in those stores. And because we are connected to the blockchain, all sorts of crypto apps will be able to acquire those crypto on Expo. So, a person might be a Binance user. I heard that Binance is really, really big in Turkey. And in Binance itself, you have a Binance Pay. So you can actually use the Binance Pay to acquire crypto through Expos. But maybe you are not a Binance user, you are a Tron user, and you want your crypto to be really on the blockchain, on the Tron blockchain. We also allow that. And essentially, we want to be very agnostic and position ourselves, including our partners OVO, to be the blockchain technology provider to the different merchants, banks, the Walmarts, the 7-Elevens that want to accept crypto. So we actually brought a few Expo devices over here. And so for those of you that are interested, you can actually try out and acquire some crypto over here. Or if you want to, say, sell your crypto today for some Turkish lira, this is the chance. And we promise very good rates, right?
Thank you, Zach. Actually, I want to make some addition. So, Exposed yes, it offers us to buy and sell cryptocurrency, but on the other hand side, Exposed helps merchants to make crypto payments. And I think it can be white labeled, in the future, when on the crypto payment side, the regulations are all clear. So Akyüz innovation team came to the Pundi X and say, okay, I have like 10,000 physical merchant network cafes, restaurants, which they have already given ongoing point of sale devices. So maybe in one night you can implement Pundi expose a key to the system, and Akyüz can provide crypto payments, and they can set up a commission rate and meditate crypto payments. This is, actually what I believe in technology side. To producing technology is very expensive. So when I first Pundi X, I said, okay, these guys also develop a technology. I don't have to think about that. Just there is a technology on the shelf. Get the technology and expand that technology in your area. So, Emre, I just want to ask you, what is the approach of the bank's approach? If one day all the regulations are clear on the crypto payment side, are you focusing to develop a technology, or to make a partnership with a technology company and get a service?
Yeah, actually, just to be clear, if all the regulations just allow us to do so, as an innovation guy, I will most probably say partnership, because it's our main responsibility to do that, and I'm actually a bit quite familiar to do that. But if we think a bit logical part, actually it's much more easier to make a partnership in that sense, because Web3 and also blockchain, just to be honest, is a new technology for banks. We don't have so much employees that are quite good capabilities about blockchain, about distributed ledgers, and also about Web3 technologies. So actually, it can be a challenge for any bank to create a technology from scratch. I believe some banks are trying to do that, but if you think about it in terms of the cost perspective, it will be really hard for a bank to just maintain the workforce and make the investment, and also it will be a really long-term investment to do that, because you should actually first increase your own awareness in the organization, your own literacy in the organization, and then your own capabilities in the organization, and then you are ready to make any development in the organization. So actually it's a really long journey for a bank to do that, and it's really costly. So, of course, we should do that, and we are trying to do that right now. But being the technology provider is something that actually banks don't do in actually traditional financial services also. We are not technology providers there. We work with different companies in getting the payment technology, getting the core banking infrastructure. So, in my opinion, it's the same thing in that structure. So, if we have a good payment provider there, we can work with them. If we have a good technology provider there, we can work with them. Actually, it will be much more easier. And again, if we want to work with a provider, it should be about regulations, a branch in Turkey, physical presence in Turkey. But if we are talking, if we can do it, I think it will be much more easier to make partnerships.
David, your side, regulations, challenges with the regulations, with the Function X project. It's a self-custodial, the non-custodial. You are in the non-custodial side, but you also the chief compliance officer of the next side. So you are experiencing, different countries, regulation challenges. So how the regulators have to approach all this blockchain side, the cryptocurrency, what's your suggestion?
Well, I think that first step is education. So to be able to educate regulators about what this technology is, and the question of what is this asset, what is cryptocurrency, is still unsettled. So I was watching Gary Gensler, who's the head of the SEC in the United States, at a congressional hearing the other day. And so before Gary Gensler came into government, he was a professor at MIT. And they showed him talking at a class at MIT saying that, according to tests and everything, Bitcoin and cryptocurrency are not securities. They're anything but securities. And then it flashed to him speaking as a government official saying, and Bitcoin and cryptocurrencies are securities. And so, of course people are confused. Regulators are confused globally because you're dealing basically with a new asset class, and trying to fit it into an existing asset class is tortuous, is difficult, and it isn't happening very easily. So regulators have to first understand the technology, and so it has to be explained in a way that they can understand. And relying on what has come before may not be entirely helpful. And so, I think where partnerships are very important is in fact with the banking industry, because we are no longer, I think initially, blockchain and cryptocurrency enthusiasts saw us as being an alternative to what has existed in the traditional banking system and being competitive with. And in fact, I think more and more the banks and the crypto world are getting closer together as us being complementary to one another, that we are really all on the same team in terms of helping people have access to greater financial services. And as the governments see, sort of traditional banks and innovative, Web3 cryptocurrency blockchain companies working together, I think they're then better enabled to come up with a regulatory framework that tries to balance. Because, do regulators have a responsibility to protect consumers? Absolutely. In whatever they're doing, whether you're dealing with pharmaceuticals or with financial products. At the same time, regulators have a responsibility not to dampen innovation, but to, in fact, encourage innovation. So it's trying to find that balance that is not easy. So I think one of those things that governments have come up with that is interesting and might work is this sort of sandbox approach. So where the government, allows startup companies and, particularly in the fintech area, to work within an environment so that they will be compliant with regulations, and so that they will be protective of consumers' rights, but at the same time to really encourage that kind of innovation. So we're at a really interesting time. I think 10 years from now we'll look back at this time and kind of laugh at it, that it was so primitive, or that we felt there was such difficulty in terms of finding that sweet spot, that balance between innovation and regulation. But it will come. It's just it's a process.
Yeah, thank you. I have a last question. I don't know. You can answer or Zach can answer. Maybe I don't know whom I have to ask. So CBDCs, it's in our life in Turkey. We have two technology companies, Aselsan and Hakan, and Central Bank is working for the CBDCs. As I know, FunctionX side, there is a blockchain you have already developed, and probably in the CBDC side, in the central bank will be looking for the hybrid blockchain connected with the banks as a validator. Probably, I don't know, but probably they will set up that structures like that. Banks will be the validator. So, and there will be CBDC will be produced. So, PundiX or FunctionX side, you have experiences on the blockchain, and do you have experiences on the CBDC project? And if any government wants to ask you to help on the CBDC side, what will be your approach, and how technically can be done?
I will answer the easy one, and then those that I can't, I'll let them read. Take one example, Singapore, right, where we are. I think the Singapore government is trying to implement this thing called purpose-bound money. And if you take away the word, the acronym PBM, it's actually money with certain limitation. Maybe it's less, instead of unlimited amount where you can spend. Now you can spend $5, and maybe you can spend in a certain designated area. And I think government and banks will adopt that because it fulfills certain characteristics that the government wants. And PundiX has been operating and together with FunctionX for 6 years. I think in crypto age, we are considered what we call OG in the crypto space. So I think a fairly experienced company, and we are talking with some governments. We attend World Economic Forum, we attend CES, and we are talking to some governments. And I think without sharing too much which government are those and who will come out first, it's also a race for the government to see who can come out with CBDC effectively. So I think I leave that as an open-ended question, and for David to answer more directly.
So I'll tell you a personal view, because I want to separate it so the company doesn't get into trouble. But so from a personal view, I think CBDCs are antithetical to what blockchain and cryptocurrency intended. So the principles behind blockchain and cryptocurrency was independence, was cutting out a middleman, was having the freedom for people to transact person to person. And CBDCs, from my perspective, are an extraordinary kind of control system for the government to be able to, if you owe tax, they'll just take the tax. If you do something wrong and have a fine, they'll just take the fine. And they will tell you how you can and can't spend your money. And to me, that is, I find that personally kind of evil. But so I'm OG. And so, you know, government is going to do what government is going to do. But I also believe that when roadblocks are put up, technology will find a way around it. So my big job in China, when I was working for Microsoft, was cutting down on counterfeits. You know, so we had counterfeit software, and it was problematic. And so every time Microsoft would invest millions and millions of dollars to find a way to, to curtail counterfeits, technology people out there were finding ways around that. So, you know, I mean, good luck. I don't know how else to say it, but I think governments, I think the pandemic kind of gave governments felt more empowered to exert control over people's personal lives. And so CBDCs kind of easily follow on that. And while governments were giving out a lot of money, which has created then inflation and possibilities of recession, they've also created this really kind of excellent sort of control mechanism. And so they can keep the governments, I think, with CBDCs, and we're going to see it, you know, in certain ways. But in Thailand, for example, where I live, the idea is to give out these subsidies, if you will, to individuals, as they did during the pandemic. But the digital currencies that they give out will be limited in their use. So that they'll have to be used within a 5-kilometer radius. You can only use, so they'll be able to direct, from an economic policy perspective. These are great tools. But I think it's kind of, every technology always has kind of like, the good side and the bad side. You have technologies that can be used to save mankind, and those same technologies might be turned around to destroy mankind. And so, just from a personal perspective, I see CBDCs as being sort of the dark side of contrary to what lay behind the idea. And so, the initial idea might have been thought of as being, anarchy or whatever, and that too is not the right way to go. But so, to hear a banker talk about sort of working cooperatively and jointly is music to my ears, because that's the path we have to go. And I think, there may be a place for CBDCs in terms of finance between nations, or that I think in terms of trade, what we call trade fi, and doing trading that way. I think there's an excellent reasoning for that, and maybe it's part of sort of de-dollarization or moving away from current state of things. But I think that it should be also tightly regulated in terms of it not creeping into people's lives to the extent that they're giving up their personal freedom to be able to spend their wealth the way they want to. Sorry.
Thank you.
I wish you could ask that question.
Thank you very much. So thank you very much. I just want to ask, anybody else wants to ask a question to our speakers? No? Yeah, please.
I'm just wondering, I know some of you have crypto, but maybe you can have a show of hands who actually own crypto. Okay, we have quite a few. That's very nice. Yeah.
Okay, then networking.